Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. It's a weakish day of trade today, but clearly as far as Nifty 50 as well as Sensex is concerned, Nifty has really crossed that 10,900 mark, psychological level, and there is weakness across the board. In fact, it's the mid caps which are really taking it on the chin. Overall, as we talk about the markets, Reliance Industries is one of the top losers for the day, but some of the counters from the metal pack like TCS as well as Infosys are really adding some bit of support from the tech pack. But it's the metals which have also melted because of growth concerns overseas.
Oh yes, in fact, hi Nisha, afternoon. I think the biggest takeaway so far is that the selling pressure on the broader markets that we saw on Friday is something that continues. And now if you take stock of the year so far, the Nifty is still holding up with a gain of about 0.5%. The mid-cap index is down 8% in 2019 so far. That's the kind of damage that we've seen on individual stocks. So today's stocks like PC Jewelers, Nalco, Adani Group stocks, GMR Infra, Ashok Leyland, all getting pulverized in trade. So not looking good. Beneath the surface, there's plenty of damage. But talking about the big stocks in focus this afternoon, Dr. Reddy's and Lupin have slipped in trade on the back of US FDA observations on their respective facilities. Dr. Reddy's is now down over 6% on 11 observations on its Bachupalli unit. Ekta joins in now to give us all the details. Ekta, over to you.
Yes, absolutely. Well, I'll start with Dr. Reddy's, which is in focus. This is after their Bachupalli unit in Hyderabad, which is a formulation plant, received 11 observations from the US FDA. Now, remember that this is the second instance that Dr. Reddy's has received the same number of observations just in the past couple of years for this particular unit. Back in April of 2017, they had received 11 observations for this unit. And however, that got resolved successfully. By December of 2017, they had received an EIR as well, or an establishment inspection report. However, the street seems to be a bit uncertain now, simply because you don't know what the nature of these observations are. Remember that the quality and the nature of the observations matter more than the number, but the fact that there are a large number of observations, that obviously has spooked the street. Remember, Bachupalli is an important unit for Dr. Reddy's, around 45% of their US sales and around 15 of their total of 100 filings comes in from this particular unit. For Lupin, similar story there. Their Goa facility, which is their most important unit when it comes to their US sales, plus under warning letter since November 2017, was re-inspected by the US FDA, received 2 observations. We don't know the nature of the observations, but the fact that there are lesser number of observations always gives hope. But remember that I just want to cite an example that recently Aurobindo's Unit 4, which is the injectable plant, also received 2 observations, but the total number of pages for that Form 483 were around 12 in number, with the first observation running into 11 pages. So that doesn't, the number of observations doesn't always give you certainty that the quality would be okay and benign as well.
All right, so regulatory concerns for the pharma sector really persist. Thanks, Ekta, for getting us all that detail. But let's shift focus to the auto space. And Mahindra & Mahindra is the stock which is on our radar. About 3.5% down. But if you really look at that particular counter, it's very close to its 52-week lows of 655 rupees per share. In fact, it has got a new 52-week low today. And all this is not auguring well, especially coming in from the results that they had posted, where they had lowered the tractor sales growth guidance for FY19. So Solia will tell us more about what brokerages make of it and how grave is the situation for M&M. After Tata Motors, M&M is also cracking.
Yes, in fact, the key reason for the fall today is that they've lowered their tractor guidance for the full year to 10% versus 12 to 14% earlier. Remember, last quarter also they said that they would barely manage to meet the lower end of the 12 to 14% guidance, and now they have lowered that further. They also expect the passenger vehicle industry to grow at low single digits of just 5% in FY19. So it's a double whammy of sorts. Remember, in this quarter gone by, the biggest disappointment was that the margins declined for both the auto and the tractor segment. Now, a lot of brokerages have cut their target prices and earnings estimates on the stock. UBS has cut the target price to 880 versus 950 earlier. And they say that auto volumes will decline further in FY21 because of the transition to BS6 norms. Not just M&M, other companies have also scaled down their guidance in the tractor industry. Remember, Escorts cut its guidance to 10 to 12% versus 12 to 14% earlier, and they expect the domestic tractor industry growth to slow down from 19% in Q3 3 to 5% in Q4. So that's the magnitude of slowdown that they're looking at. Credit Suisse put out a note where they have also cut the target price on Mahindra & Mahindra to 890 from 1020 earlier, while Deutsche Bank has a buy rating, but they've cut the target price to 815. They say that they expect a slight improvement in the FY20 auto margins, but the tractor volumes will continue to be under pressure.
All right, so that's the word coming in on Mahindra & Mahindra. Thanks, Sonia, for giving us that whole analysis. At the moment, take a look also at Max Financial stock, and that has slammed further, actually is down now on the back of the Q3 numbers that have been really released right now. So standalone revenue 34% up at 176 crore rupees. As far as the standalone net profit is concerned, that's up about 41%. That stock is really digesting that number, but is down about 1% right now. All right, let's take it straight across to also DHFL, which continues to reel under pressure. In fresh developments, we understand from sources that the Income Tax Department has sent notice to the company under Section 131 of IT Act, asking it to explain certain suspicious transactions found in its books. And Timsi Jaipuri, our colleague, is joining us with exclusive details on that. Tell us, Timsi.
Well, as you rightly mentioned, DHFL has got a notice from the IT department last week itself under Section 131 of the Income Tax Act. Now, this section empowers the IT department to summon a company or an entity or an individual seeking explanations, seeking proof regarding certain transactions which it feels have not been explained in the various documents and declarations that a company makes, be it with ROC, be it with the Income Tax Department when it comes to their IT returns, etc. Now, what DHFL also has told CNBC TV18, the senior company officials who did not wish to be quoted and did not want their name to be there, but yes, they confirmed the development and said that yes, a notice has come to DHFL where DHFL is right now preparing the documents that it needs to submit in front of the IT department. Mumbai division of the IT department has sent this notice summoning the company to explain these transactions. Now, what are these transactions? What is the nature is not known. But yes, right now, DHFL has got a notice asking to explain suspicious transactions. Let's see what happens. Back to you.
Okay, Timsi, thanks a lot for giving us all of those details. But on to another CNBC TV18 exclusive. We learned from sources that private equity players have expressed an interest for PNB's stake in PNB Housing Finance. Abhishek Kothari joins in now to give us all the details there. Abhishek, over to you.
Well, Sonia, there has been expression of interest as well as bids submitted by private equity players for PNB's stake in PNB Housing Finance. So PNB has received bids from Carlyle, General Atlantic and Vardhe Capital for its stake sale that it wants to do in PNB Housing Finance. Now, PNB is looking to sell its entire stake of close to 33%, more to be precise, 32.8% in PNB Housing. The suitors have submitted the final binding bid, which for PNB stake post due diligence. Due diligence for two of these may not be such a worry because they are already shareholders, that is General Atlantic as well as Carlyle. So process to sell with management control will actually need NHB approval, and PNB will continue to have a director on the board of PNB Housing. Now, we need to see very closely whether an open offer will get triggered or not because of the change in management. Just to alert our viewers, the current stake in PNB Housing Finance, PNB holds around 32.8%, General Atlantic Singapore holds around 9.9%, Carlyle holds about 34.24% in PNB Housing Finance. So we had written to all the concerned parties. So PNB's reply is that, the stake selling exercise is under process and they will make all requisite disclosures once the transaction is finalized. General Atlantic have declined to comment, and Carlyle as well has declined to comment on our story. Back to you.
All right. Thanks so much, Abhishek, for giving us that exclusive bit of information. It's a large transaction, which is very important for PNB. So take a look at PNB stock that has, PNB Housing Finance is the one we are talking about. That has perked up a slight bit on the back of this information. Now, always remember that Carlyle Fund 4 is invested in PNB Housing Finance, has about 34% stake. And what is really bidding is Carlyle's Fund 5, which is a new fund. So instead of selling at a low lower price at this point, Carlyle may be doubling down its stake in overall PNB Housing Finance by way of this bid process. So let's see where it ends. Three suitors right now for PNB Housing Finance, and PNB should look positive in this context. With that, we'll slip into a short breather on the show. But up next, remember, the Supreme Court has approved ArcelorMittal's bid for Essar Steel, and more on that when we return. Stay tuned.